Okay. So I think we are good to go now.
Just paraphrase.
Okay, sir. So far, I think we are trying to discuss where we stopped last week. But for the sake of the previous knowledge, just to give a quick recap on what we did last week, where we talk about green candle. Green candle is actually what we call a bullish candle. And bullish candle is a candle that has what? An upward movement. It opens from the bottom and it closes at the top. As you can see from this chart, it opens from here, then it closes at the top. As you can see the arrow inside the green candle, it shows an upward movement. Then comparing this with the second one, which is the red candle, you can see the open is at the top, then the close is at the bottom, which means it has what we call downward movement. It is a bearish candle. And I said something about this green candle. When you see green candle, you should know that the buyers are in charge. It doesn't mean they are not sellers. So when you see green candle, but know that buyers are more than sellers. That's why you see green candle. Anytime you see red candle, you should know that sellers than buyers. Although this color you are seeing, it is possible for you to another one, turn it to white. The blue can also mean that the market is bearish, but to avoid confusion, this color is the fundamental and the globally accepted color. They mostly use this. So the reason I mentioned this was that in case you see another color, some people decide to change. There is a place where you do the settings on Binance, on TradingView, on what have you. You can change the color on MetaTrader 4 too. You can change the color to any other color you choose. But this is the fundamental and most widely used. So when you see green candle like this, you see that it's going upward. Then when you see red candle, you know it is coming downward. Green candle implies a bullish market. That is, the price is going an upward movement. While red candle is showing what? A bearish market. That's why you see people saying the bears and the bulls. So when they say the bears and the bulls, they're actually talking about the sellers. The sellers are the bears, while the buyers are the bulls. So sometimes those in crypto space, you may see a lot of information that might confuse you. But because of this training, you'll be able to crack a lot of the information because of the terminologies. When you see bullish, buy, bearish, sell. So these are the things. On green, you can also see some people, they might use go long. When you see go long, then go shorts. Go shorts, you know it is sell. Let's move forward. That's not the main agenda for today. Then we also talk about some kind of candlesticks that has some shape. When you see a shape like this on candlestick, this is what we call hammer. The interpretation of an hammer, there is a video for it. Only relate to the video. When you need that, you can get it from who is that? Please kindly moderate the audience for me, please. Let somebody try and moderate the audience, please. Somebody is distracting me. Thank you.
Sorry, did I fire on?
So now, for this is hammer. The interpretation of hammer, we have already treated that because of time, so we shall move on. Then following that, the second one, which is bullish engulfing pattern. This is the shape. When you hear some people saying bullish engulfing pattern, it can come out in the news. You will know that this is the shape of the candle. Then another thing, the next one is piercing pattern, where you first have a bearish candle followed by bullish candle. But the bullish candle, which is the second one, is shorter than the first candle, which is bearish, followed by tweezer bottom, where you have double hammer. The first one is red, the second one is green. That's tweezer. Then the third one, which is morning star. When you see morning star like this, that is where you have something like this. The first candle is bearish, which is red, followed by a plus sign. This plus sign has a name. That is what I referred to doji the other time. Doji. Whenever you see doji, it means that there is an indecision in the market. Neither the buyers nor the sellers won the battle. There was an equal buy and equal sell in the market. That's where you have a plus. Before it becomes doji, at first you might see a green where the market will be going up, later it will be coming down. In the end, it will later end like this. That means there was an equal buy and sell in the market. That is where you have a doji sign. I'm sure we are following. So there is an interpretation. Anywhere you see something like this, there is an interpretation of what it means in the market, especially when you spot it on a downward trend. Whenever you see this, it is a sign that the market is going bullish. Kindly refer to more information on this on the last training because of time. So moving forward, we want to show the example of a real life chart of something like that. See morning star, the one we explained earlier. Whenever you see morning star at the downward trend, it shows a bullish trend. Let me show you morning. See morning star, see the shape. Then in a real life chart, you see something like this. This is a plus sign. This is upward trend. That is on the real chart, morning star, followed by bullish engulfing pattern. See bullish engulfing pattern. No, we said bullish engulfing pattern. The first candle is red, then followed by the second candle, which is green. The second green candle is taller than the first red candle. That is bullish engulfing pattern. Anywhere you see this candle shape on a downward trend, it is telling you that the price is what? Is going bullish. It's going up. As you can see, it actually went up on this trade. So that is that about the charts. Then followed by the last one, which is what? Bullish engulfing pattern again. This is another example of another chart. Look at it. Where you also have the first candle, which is red, followed by the green candle, which is green. The green candle must be taller than the red candle. That is actually what we call bullish engulfing pattern. So that is that on the live charts. We have done this last week. It was just a quick recap. Now, we are actually starting from a bearish reversal candlestick pattern. What is bearish? Just like I said earlier, bearish means the trader, simply put, when you hear bearish, just take it that traders are selling in the market. Just take it that the price is going on what? Downward movement, simply put. So now, following this, bearish reversal candlestick pattern signify that sellers are momentarily in control. Just like I said, whenever you see red candle or green candle, it doesn't mean that it is only one thing that is happening. But the only interpretation is that when you see green, it is telling you that there are more buyers than sellers. And when you see red, there are more sellers than buyers. So when you see bearish pattern like that, the sellers are really taking over. They are taking charge of the market. It's just like a war. You are into war. There are some set of army, they are on green uniform. And there are some other set of army, they are on red uniform. So when you see that the red army, they are actually defeating the green army, they are killing them too much, you are going to see more of a red color, red candle than green. That is what it means. So now, moving forward again, there are 5 bearish reversal candlestick patterns you should know. Based on this material, you see what we call shooting star, bearish engulfing pattern, dark cloud cover, tweezer top. Remember on bullish, we have what we call tweezer bottom. And lastly, evening star. On shooting star, a shooting star is a one candle bearish. bearish reversal pattern that forms after an advance in price. This chart, these people speaking in the background. For this shooting star, before the red candle like this, at first, the market is already on bullish. That is, it's already going up like this. But there was a pullback. There was a reversal whereby the seller took charge. And I told you the last class that when there was already a bullish pattern like this and the seller took charge, there will be a traces that market was already here before it was forced down. The traces will now turn to just a line. That is where you have just a line like this. So by the time the seller pulled back the market and reversed it, this candle that look like this will later now form like this. It will form like this. That is where you have a shooting star. Here is how to recognize it. There is little to no lower shadow. Little to no lower shadow. This is what we call shadow. Remember the last class, I said this thing, this line you are looking at, sometimes you can call it shadow, you can call it wick, or you can call it tail. Look at it here. They're actually calling it shadow. So don't get confused. It's also the same thing as wick or tails. The price closes at the bottom 1/4 of the range. That is, when you divide it to 4, it closes at 1/4 of the size of that candle. That is a shooting star. It is just the same shape of when you call hammer. Do you get hammer, which forms like this? But when it turns upside down, you call it shooting star. Some people even call it inverted hammer. So let's move on. The upper shadow is about 2 or 3 times the length of the body. Look at it. Upper shadow is about 2 or 3 times the length of the body. And this is what a shooting star means. When the market opens, the buyer took control. I explained that earlier. When the market just started, the trade looks like this. The trade was going upward, but later it was reversed. It started coming downward again. The moment it comes downward, if it now stops here, this is the only place you will have a body. The remaining will just be a line. That line is the traces of the body you already have before the market was reversed up to this level. It will now turn to something like this. Before, it was something like this. But because the market reversed back up to here, it will turn to this. So that is a shooting star. At the buying climax, huge selling pressure stepped in and pushed price lower. From here now, the buyer have already bought up to this level in green color. They bought up to this level in green color. See, but the seller pulled it back. They now erased the whole body. They erased it like this. It now turned to just a line and formed just this small body. Then the selling pressure is so strong that it closes below the opening price. In short, a shooting star is a bearish reversal candlestick that shows rejection of higher price. You mean? I mean, it was rejected before. The price has already gone green. It let now pull it back and turn red. I'll show you the physical trading of this. Then moving forward, just because you see a shooting star doesn't mean the trend will reverse immediately. You will need more confirmation to increase the odds of the trade working out, and it will cover some details later. So now, bearish engulfing pattern. Bearish engulfing pattern is actually a 2 candle, which is bearish reversal candlestick. Then, how do you recognize that? The first candle is a bullish close. That is, the first candle is green. The first candle is color green. Then the body of the second candle completely covers the body of the first candle without taking into consideration the shadow. The second candle closes bearish. So anytime you see something like this, you know this is what we call bearish engulfing pattern. Then on the first candle, the buyers are in control as they close higher for the period. On the second candle, strong selling pressure stepped in. That is, for this green candle, it shows the buyers are in charge, followed by the red candle. Kindly mute your mic, please. On the second candle, strong selling pressure stepped in and closed below the previous candles, which tells you the sellers have won the battle for now. In essence, a bearish engulfing pattern tells you the sellers have overwhelmed the buyers. So whenever you see something like this, bearish engulfing pattern, it is telling you that the sellers are winning, simply put. Then dark cloud cover. Look at this, dark cloud. If you look at this, the shape may look somehow the same, but what is actually the difference? If you look at the first one, the red candle is longer below. But if you look at the second one, the dark cloud cover, the red candle, the second candle, the red, is shorter below. It was equal from above, like this. They are equal at the open side, but at the closing end, the red was shorter than the green. So a dark cloud cover is a reversal candlestick pattern that forms after advance in price. When they say advance in price, they are also talking about what? Buying. So when you see advance too, this is another terminology. Kindly take note. Advance in price means buying pressure. Then under the bearish engulfing pattern, which closes below the previous open, the dark cloud covers closes within the body of the previous candle. Thus, in terms of strength, the dark cloud cover isn't as strong as the bearish engulfing pattern. So the first candle has a bullish close, that is green color. The body of the second candle closes beyond the halfway mark of the first candle. The body of the second candle closes beyond the halfway mark of the first candle. The second candle closes bearish. And this is what a dark cloud cover means. On the first candle, the buyers are in control as they closed higher for the period. On the second candle, selling pressure stepped in and it closes bearish, more than 50% of the previous body, which tells you there are selling pressure. That is 50% of the first one, which is this. If you divide this green to half, that is 50%. The second candle closes above what? A bit below now, below 50% of the first candle. And it actually implies there is a what? Selling pressure. So now, followed by the next one, which is what? Tweezer top. If you look at this very well, beginning, earlier, I've already talked about Tweezer bottom. Tweezer bottom. This is Tweezer bottom. Now we have Tweezer top. Look at it. It's just the opposite of that. Tweezer top is actually showing us that the first candle shows rejection of higher price. When you hear rejection, rejection simply means that, I explained that last week too. It was already like this, but later there was a downward trend. There was a downward trend. So it reduces this body to maybe there was the downward trend from here to here. It will now turn the body from top to this place. It will turn into just a line. Then it will remain small body like this. You will now draw it out like this. See. Before it was like this, the whole candle was like this. But later there was a what? Rejection, where the price was coming down again. It now erased this body. It erased it like this and only remained something from here. That's why you have a line. That line is the traces of that body that was rejected. I'm sure you understand. So on the first candle, the buyers pushed the price higher. You can see the buyer pushed the price higher up to this and were met with some selling pressure. So when selling occurred from this point up to this point, it now turned into just a line and erased the body. That's what it means. On the second candle, the buyers again tried to push the price higher but failed. What does that mean? The buyer, this candle from here to here, it was a green candle before. It was a green body. It was a green body like this. But later, the sellers pushed the market down up to this level. That was why it became just a line. Then they started pushing it down, pushing it further. So they now turn this side to what? To red. They turn this side to red. That's why you have this shape like this. Now, when you are to interpret this, you say a tweezer top tells you that the market has difficulty in trading higher. When you see trading higher here, they are telling you that it has difficulty to go up. It has difficulty of what? Buying pressure. That's what they mean by difficulty in trading higher. You know, there was a place they used advanced earlier. Advanced in price. See, advanced in price. So sometimes when we don't know the meaning to all these terminologies, it will be difficult for us to even be successful in our fundamental analysis, because those crypto news journalists, they use most of this terminology. So if you cannot phantom meaning to it, you may not be able to crack the interpretation appropriately. Do you get it? Here they were talking about advanced in price, that is bullish, trading higher, bullish. Do you get it? So these are something we have to take note. Evening star. Evening star is just the opposite of morning star. If you remember, we have something like this earlier. We have something like this earlier when we talk about morning star. Morning star, where you have the first one with red, like this. Then you have doji.
Are you there? Okay, well, we're not getting more questions. Mic check.
I'm here.
Oh, Mr. Judy, how are you? It's been a while.
Who is speaking, please? Mr. Olahari. Moving forward, we're talking about evening star. Evening star is just the opposite of a morning star. Looking at this candle now, when you look at this, at first you have green candle followed by doji, then followed by a red candle. When you have something like this on evening star, let's look at it. It's talking about that the first candle has a bullish close, the second candle has a small range, then the third candle closes aggressively lower more than 50% of the first candle. Then what's the interpretation? On the first candle, it shows the buyers are in control as the price closes higher. On the second candle, there is indecision. You know, indecision, when you see indecision, simply put, we are talking about a doji sign, a doji candle. This is where I talked about that neither the buyer nor the seller wins the battle in the market. there was equal buy and equal sell. That is where you have a doji. Then on the third candle, the seller won the battle and the price closes lower. This is the third candle now. Look at it. It was a red candle, meaning that the seller took over the market again. Now, this is the interpretation. An evening star tells you the buyer are exhausted and the sellers are momentarily in control. So that's it. How to find high probability. How to find high probability bearish reversal setup. Now, to do this, if the market is trending lower, then wait for a pullback towards resistance. If the price pull back towards resistance, then wait for a bearish reversal candle pattern. If there is a bearish reversal candlestick pattern, then make sure the size of it is larger than the earlier candle, signaling strong rejection. Then number 4, if there is a strong price rejection, then go short on next candle open. Go short, don't mind that term. When you say go short, I think I explained it earlier. Go long, go short. So I'm sure you remember. Go short is that they are trying to tell you that you should sell the next candle. Then let's look at it from the live chart, bearish engulfing pattern. Look at it. I want you to note something, just like what we saw on the bullish engulfing. Let me remind us again. When you are seeing a bearish, a bullish engulfing, the market trend must be downward. The market trend must be downward movement, and you have a particular sign, bullish engulfing pattern. Red, you have a red, then you have green candle at a particular strongest support. When you have this, you must have gotten confirmation before you know that this bullish engulfing pattern is telling you that is a good spot for you to what? To enter, to buy. That is what it is telling on bullish engulfing. It is at the bottom. But now looking at this, on bearish engulfing pattern, when you look at this now, let's say this is our resistance line, this is our support line. From the top, you can see for bearish, the trade was already at the top. That is where you spotted bearish engulfing pattern. It's too big. Bearish engulfing pattern. You have a green candle followed by longer red candle on a downward trend. This is bearish engulfing pattern. So you spot this at what? When you see upward movement and at the what? Resistance, you spot a bearish pattern, then it is preparing to what? To come down. Can you see? Unlike the other one where we see a downward trend. Let me quickly show us. Look at this very well. This is an upward trend. It hits the what? The resistance at the top. Then you spot the bearish engulfing pattern. That's where you know that the market has tendency of what? Coming down. Let me quickly scroll up and show us when we saw the opposite of that earlier. Look at it. Look at it. The market is a downward trend. See, downward trend. That is where you spot what? Bullish engulfing pattern. So you know that at the what? At the support here. Sorry. At the support line, you have gotten confirmation of what? Of bullish engulfing pattern. You know that the market is coming up. That is for bullish. When you are buying and you're expecting the price to go up. But for bearish, on the other hand, the market is already at the top. The market is overbought. Look at this. The market is overbought at what? Upward trend. Look at this. So at the resistance, you spotted bearish engulfing pattern. So with this confirmation, you know that the market is coming on what? Downward movement. So let's
Mr. Yusuf, unmute yourself, please. Unmute yourself, sorry. Mr. Yusuf, unmute yourself.
sir. Okay, sir. Can you hear me now?
Yeah. Yeah, sure. Loud and clear.
Okay. So now this is another example of bearish engulfing pattern. Look at it. Bearish engulfing. This bearish, I told you that it is what? Selling, Abi? Selling. That is, you can also call it downward. Downward. So the bearish engulfing, this is another spot again. The market trend is already going up. Look at it. As it hits the what? The resistance line. The resistance, as it hits it here, you now got confirmation. See, this is the bearish engulfing pattern. As the candle hit this line, it couldn't break out from this resistance. And from here, after it is bearish, no, this green candle couldn't break here. See, the green candle couldn't break further to the top. The next candle was red, and the red is deeper, is lower than the green. That's why we have bearish engulfing pattern. This is a signal that is coming downward because it was spotted from the what? From an upward trend compared to the other one. Hope we are following and we understand. Then shooting star. Look at shooting star too. Shooting star, just like the example we showed us. See, this is a doji. You can see shooting star. This is explaining that we have shooting star. You first have green candle, the one we saw earlier. Let me use the perfect color so that we'll get it. Green candle followed by doji, which I called indecision earlier, then followed by red candle. You see, followed by a red candle like this. This is shooting star. Mind you, when you spot something like this, you are spotting it at an upward trend. See, the market was first going up. It find this difficult. The candle find it difficult to break the what? The resistance. Because it couldn't break the resistance line, you know that the next candle that is showing red, it is a signal that the price is coming down. That is shooting star. Hope we are following as we explain. Then indecision candle, candlestick pattern. Do we still have much? Let me see. There is still much. Maybe I stop here, then I want to try to go on a live chat. So before I pick this indecision candlestick pattern, before I go deep there, let me quickly just show us. Look at it. I was talking about doji earlier. There are different shape they have. Some of them we have little body, then it will have a very long wick. But look at, there are some others. Look at this. Wow, perfect. This is the sign. In the market, as both buying and selling pressure are in equilibrium. Thank you. I love this word. Both buying pressure are in equilibrium. Then the candles open and close are around the middle of the range. The upper and lower shadow are short and about the same length. Although doji is an indecision candlestick pattern, there are variations with different significance. Doji or gravestone doji. What do they mean? Look at it. Now I want to try. Let me try and stop here. I want to share a live chat so that we'll be able to spot what we are saying. Let me quickly share a live chat. I am logging into my Binance. I'm logging into my Binance. Let me try to look for okay. Let me check Bitcoin. Now look at this. You know, the last some classes we have held in the past. We have already talked about this candlestick. I think there is a recording for it. These are what I was explaining earlier. The red candle bearish, the green candle bullish. And we have also talked about the time frame, the 15-minute time frame, 1 hour time frame, 4 hours, daily time frame, like that. If you want to know more about the time frame, if you meet the classes, you can just request for the YouTube recording. See, 15 minutes, 1 hour, 4 hour, 4H. 1D means daily time frame. Then furthermore, you can click on more. Where we have more, you can see more time frame. When you click on that, you'll be able to get 1 minute, 1M. Look at it. We have two 1M there. Look at the first one, 1M, another 1M. This 1M is one small letter M, 1 minute. But one capital letter M means 1 month. That's the difference. There are a lot of details about this. I don't want to spend much time on this. So let's move on. So this is what I want you to spot. Look at it. We were talking about different shapes. Look at it. We were talking about doji. See, indecision. Where neither the buyers nor the seller wins in the market. See. Look at the sample. Now, I want to show us something. Let me go to 1 minute time frame so that it will show the movement quickly. It will show the movement. I said for green candle, when the price is going up, it shows that the buyers are in charge. You can see this last candle, the green, initially it was up here before it reduced down again. Look at it. This is another minute at 9:31. It forms another candle. So if this is going up, you can see it is showing green because the buyers are in charge in the last 1 minute. That's why it is showing green. If it changes direction now and it is showing red, it means the seller took charge of the market again. So that is what the shape is telling you. And from this shape, by the time it will be coming back, it will leave a line. This thing is not moving well. Is it my network or what? Bitcoin used to move very well. Let me try another coin. Let me try another one. This is BNB. Look at it. You can see this plus sign. This is the doji I was explaining earlier. See, this is doji, the plus sign, indecision. Look at this inverted hammer. You know, I was explaining tweezer earlier where we have something like this. Do you get it? This is tweezer top. Then we also had what we call tweezer bottom. Look at this. Every 1 minute, these candles are forming. If the price is going up, if buyers are buying, the green will be going to. They are sellers. Now, you know it was green before. It's green again, it's red. When you see green, it means the buyers are in charge. When you see red again, the sellers are in charge. See, the sellers have took charge. You can see. The rejection that made it show this line is saying that this is what? This is a rejection. The buyer tried to pull back. That is why you saw the line. But still, the seller didn't agree. The seller is still forcing the market down. That's why you are seeing red. See, this is another 1 minute. Because we are on 1 minute time frame, these candles are forming every 1 minute. If you put it on another time frame, before another candle can form, be it 2 minute time frame, 5 minute time frame, 15 minute time frame, or thereabouts. So until that time, it will show you when those candles are forming. See, that means this is telling us that in the last 3 minutes here, the market is red. The sellers are taking charge of the market in the last 3 minutes. Do you get? That's why you see red candle, red candle, red candle. By the time we get to 9:33 now, based on my time, 9:33, 9:34, another candle will form. It can either form green or red based on the direction the market goes. That is that you can see. This is the fourth candle now. This is the fourth candle. Look at this green now. It's finished with spinning top. Spinning top. We now have another green candle, Maribuzo. It is still rejecting. You can see. You can, as it is going up, the green is telling you that the price is going. The buyers are in charge. The buyers are in. This is 9:34. Let us try to round up here. If there is any question, so we'll be able to take some question. We don't want to take much of our time. So if there is any question based on where we stopped, let us try to signify and ask question. Thank you. Any questions so far? Okay, I saw some questions. The moderator should just put everyone. Question: how is the resistance line determined? Somebody just asked, can you hear me? Okay, I can see one hand up. Let me quickly answer this first question from the chat, so I'll be able to move on. The question says, how is the resistance spotted? Let me go back to my Binance. Actually, there was a class for support and resistance, but based on the question, I'll quickly just, first thing first, we need to know what support and resistance is. It's like a roof and the ground. Let me draw two lines. See these two lines. The top is the what? Is the resistance, and the bottom is the what? Is the support. This is how it is spotted. When you have a candlestick moving like this, moving like this, moving like this. So the bottom here, these are what? Supports, and these are what? Resistance. It's just like you throw a ball from the ground. You bounce it to the ground. Let's say this is the ground. You bounce the ball on the ground like this, and it's bounced back to the top. As the ball reaches the ceiling, it bounced back again like this. So this bottom is what we call support. Then this top is what we call resistance. This is support, this is resistance, this is support, this is resistance. Now you need to know how to spot in a chart. So for you to spot support and resistance, this is a live chart now from here. From here, these are where you can spot support and resistance. Let me quickly draw a line. Based on example, we are using Binance. So permit me with this. Look at this. These are some support line. Then for resistance, look at this. These are some resistance. See. So this is one support. This is resistance. Look at this, support, resistance. Look at this. This is another bottom here. Support, resistance. Then support again, resistance. Look at it. This is another support. With this now, we can say this candle here, it broke the what? The support line. That's why you have it longer like this. Do you get? I hope I have answered your question. For the person that just asked the question now, I hope I have answered your question. Let me quickly check the name. the name of the person that asked the question. S.O. Sadiq Olawale.
Yes, my name is Sadiq Olawale.
Okay, sir.
Okay, can I go ahead with my question, please? Good evening.
Good evening. You're welcome. Please do.
Thank you very much. I'm very, very new on this platform, and it's really educative. And I'm also new to cryptocurrency. Unfortunately, I opened a Binance and I jumped in, and I think it's something I can play around with, and I've really burnt my hand. So being in this platform tonight have really helped a lot, and it has educated me. This is actually my first time. Why I ask about the resistance and the support is that most times when I open my Binance and I look at the coins, I just buy. And I wake up the next day and I'll see that the thing has gone down, 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 down. Meaning, if you're now saying that there's a support, there's a resistance, and you trade a ball, there are a lot of cases that the ball will just go down, 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 break the support and go down, just like it happens in my Luna that I bought last week, and the thing dropped so bad. So how do one coming into the game? I mean, at what point do you know that, okay, this is support, this is resistance, and when the ball, at what point will the ball not break the support and drop down, 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 down? That's my, and add up to my question. Thank you very much.
Thank you very much, Mr. Asa. Don't go yet. I want to know, do you have a robot you are trading with apart from Binance that you are using to trade?
Yes, I have a Royal Q. I have a
Activated
Royal
robot.
Q. It was activated, that should be last year, if I'm not wrong. It was
Okay.
activated last year.
Do you still
Yes.
trade with the robots?
Well, unfortunately, the robot that was, the coins that were set up under my robot, the coins have dropped so low that the robot has refused to trade again. So the coins are just there. So there's this floating loss, or what's it called? The thing is just there, very high percentage. And I'll be very frank with you, I just leave it there. So let it just be there. Because
Very
the,
well.
the coins, or what's it called, have dropped. So the robot has just refused to work.
Okay, well, actually, it's not that the robots refuse to work, but floating loss is part of the experience. It's just that you have a liberty to pick another coin, make another trade, and all. It's good you are using Binance, but you don't just go into the market blindly and just pick a coin and trade. There are some background knowledge you need to learn, and that is why we're actually working on something like this. That everybody must know when to enter a trade, how to enter a trade, and how much to enter a trade with. This class is a progressive one. It's not just for tonight. There are some basics we have discussed from the beginning before we got here. Speaking of the fact that sometimes, as you said, that you can throw a ball and it will go past the roof or go past the ground and will go underground. There are cases like that in which the same thing can happen when you are bouncing a ball at a decking. On top of a decking, the decking could be your resistance, and at the same time, a resistance normally turns to support. So when you are climbing a staircase and you are looking at a decking as a resistance, by the time you climb the staircase up to the top and you stand on top of the decking, automatically or technically, the decking has turned to your what? To your support, because you have already climbed at the top. But when you are now bouncing a ball, it is possible for your ball to step through the staircase and go on the ground. That means your trade has broken the support line. So you need to learn this technicality. It's not just something that you can, of course, there are some past videos on YouTube for these classes. I think this is about the fourth class, the fourth week or so. So there are some little background you need to know. And with your robots, the benefit that is on Signal Group, in which some people have already worked on a particular analysis for you. and they are giving signal. This will really help us not to jump into trade blindly. But in spite that, the fact that we are doing this is that we want you people to learn how to figure out these things yourself based on the signal they gave to you, how they arrived at the signal. That is the essence of all this. So it's good you are here. I want to implore you, try to keep coming. Don't ever miss the training, the technical like this. And there are other training. There are some people that are even offering free training every day. If you are interested, you can keep learning and learning. And for the past training that might answer more of your question, how to spot support, resistance, upward trend, downward trend, just like I'm explaining here, there are videos. I'm sure Mr. Mosh Money will make it available. That is if you are on the group. It will really help you a lot to get some answers. Hope I've answered your question satisfactorily, sir.
Yes, you have. Thank you very much. I really appreciate.
Yeah, you're welcome, Mr. Olawale. Any other question, please? Any other question? Madam Grace, I can see your chart. At what time frame is it best to draw the support and resistance? So that's the resistance line. So I have a question on the chart. At what time frame is it best to draw the support and resistance line? Very good. I love this question. Based on my home, Mr. Sadiq Olawale, kindly lower your hand, except if you have another question. But let me answer this first. Okay. Please, let me confirm. Can you see my screen from there? Can you see my screen?
Yes, we can.
Yeah, thank you. God bless you. The question says, at what time frame? If you ask me, I love to use 1 hour time frame best. And for a short trade, I love to use 15-minute time frame. These are the best points. So, but based on the trade, based on the trading you are actually analyzing, it will determine what time frame. If you are not a long-term trader, there's no point you drawing your support and resistance above 1 day, that is daily time frame. If you are not a long-term trader, there's no point for you drawing your support and resistance above daily time frame. Just like I said, my own best time frame is 1 hour and 15 minutes. That is what I use most. But based on your own, you can determine based on the kind of trader you are. If you are a short-term trader, 1 hour is good. If you are a long-term trader, you can use 1 day or weekly timetable. But it's based on the analysis you want to do. Let me go back to Bitcoin. Just like the explanation we did the last time. If you want to determine Bitcoin now, you can say you want to know based on the history now since we have the all-time high since November, the market has been doing somehow. So if you want to get some information based on that trend, this can tell you, look at it now. What I have here is a monthly time frame, which means that each candlesticks are forming every month. If you look at it now, look at my screen well. This candlestick is for the month we have, which is May. Look at it at the bottom here. I want to rule it. See, May 2022 0501. This is the candlestick that we have presently. Then apart from that, the following one is April. Look at it. Oh, sorry. Followed by April. Look at it. Followed by. So now, if your analysis is based on the fact that I want to see what Bitcoin has been doing for the past months, look at this now. You can say this is a particular. Okay, let me draw it out. See, on a monthly time frame now, you have one here. I will leave this thing, Jerry. You have one here. Look at it. Look at it. This is a particular support. Then look at this. This is a particular resistance. Look at it. This is based on monthly time frame. Now, if you want to analyze Bitcoin on a monthly time frame, for some months back now, Bitcoin has been on what? Downward trend. Look at it. Downward trend. And when you look at it, this 69,020 all-time high of Bitcoin, it happened since November. So we can say since November, we have been having what? Downward trend, except when we get to December, January, February, March. February, March is where we have two green candles. Then we still have what? April, red, green, red. So based on monthly time frame, when you look at this, you will see that you have been having downward trend. If you want to break it down further, you can also go to what? Weekly time frame. 1 week. This is weekly time frame. Look at it for the past weeks now. How many weeks now? 1, 2, 3, 4, 5, 6, 7, 8, 9. For the past 9 weeks, this chart is saying that we have been having what? Downward movements, which is red candle. Look at it. So it depends on the time, the period at which you want to analyze. Sometimes, if you want to quickly enter markets and exit the market quickly, you can do your analysis based on 5-minute time frame. So the support and resistance you are going to draw, it will be based on the 5-minute time frame you draw, because you have already made up your mind that I want to enter the market quickly. Just check for opportunity. Enter based on my support and resistance. Check where you have a strong support. Determine that the market is either on downward trend or upward trend. Then it will tell you that, okay, let me quickly just enter the market, take 2% and leave the market. So it is the period at which you are trading that will determine. But based on my own, just like I said, I prefer to work with mostly at best 15-minute time frame, 1 hour time frame. That is my best. But sometimes when trade has excessively gone up and I look at it, I may decide to wait for the market to retrace down. Then I just go on 5-minute time frame and do some little analysis and use that to enter the market. So with this small explanation, I don't know, but I hope I have answered your question, ma. The screen is frozen. Please, how do I join the WhatsApp group? Mr. Sadiq Olawale is asking, how do you join the WhatsApp group? I'm sure your upline must have a group. Mr. Sadiq Olawale, if you are there, okay, you can speak, please.
Present, sir. Present, sir. I am here, sir.
Yeah, do you belong to any WhatsApp group of your upline?
Yes, I do. My upline, yes, I do.
What's the name of your upline?
Mr. Taiwo.
Mr. Taiwo. What about your upline, V4, V5 leader? Anybody you know? Do you know how much money?
I don't know anybody. I only know Mr. Taiwo.
Taiwo. Where are you located, sir?
Lagos, around Abeson State.
You are in Lagos, Mr. Taiwo. Mr. Much Money, are you there?
Yes.
My Oga, are you there? Mr. Much Money is not available.
Yeah, but I have many Taiwo in my teams. I don't know the exact Taiwo to be precise. So
in Lagos.
I don't know the exact Taiwo he's talking about because I have like 2 or 3 Taiwos in my team. So.
And those 3 Taiwos, are they staying in Lagos?
2 of them have team in Lagos. 2 of Taiwo have team in Lagos. So I can't say who.
Okay, I want to suggest, Mr. Olawale, kindly speak to your upline, then request that he should add you to the general group and try to know some leaders. These are the advantages of coming to training like this. You'll be able to recognize some other leaders who may help you further, apart from what your direct upline can render. So with that, through Mr. Taiwo, just let Mr. Taiwo, your upline, know that you want him to add you to other group, other leaders group, so that you'll be getting first-hand information. Thank you. Any other question, please? Any other question? Madam Grace, I hope I have answered your question, ma.
Can I ask a question, please?
Please go ahead.
Good. Now, what we're learning today, that means aside from using the robots to trade, I can also trade on my own Binance or any other platform myself. I want to get that right.
Absolutely.
Because the robot is meant to assist me in trading whichever coins is selected for the robot.
Can you
the
repeat
robot
that?
is meant to trade on my behalf. Sorry, can you hear me, sir?
Yes, I can.
Good. The robot, the royal queue, is meant to do the trading on my behalf. So whichever coin is selected. But now, from what I've learned today, is something that, okay, I can go into Binance, look out for coins and trade myself. Am I right?
Yes, you are correct. But let me quickly clear something. Speaking of the robot that is meant to trade on your behalf, yes, it's a yes on one part. It's a